morning, all. Ira Epstein with your morning flash update, and this update is for Thursday, and we're at the 16th of February, 2023, 8:30 a.m. Central Time, just opening up in all the stock markets. As you can see, down across the board, you'll see why. The PPI number came in red hot. So, the Fed can talk all the lag they want. It was like temporary when we were getting inflation during COVID, and each time you get one of these breaks that has some merit to it, the market has recovered. And the key is the 18-day average of closes. I keep pointing it out to my subscribers that are in my morning videos, and I can't make it any clearer. Eventually, if you break through that and stay under that number, then you can get a twist and turn and things. But you haven't done that yet. The dollar up moderately. I think the Fed is now, and I'll bet that the Fed watch page starts pricing in 5.5%. In other words, an interest rate hike coming in March. I bet if it stays like this, the data, in May, which will be the next Fed meeting after the March meeting, they'll have another one after that, and then we have to take a look. But that's how it's looking. The higher dollar weighing a little bit on markets. You can see it's weighing in here on the grains of fraction. Bonds and notes, they're making moves back up towards recent highs. You're sort of waffling in the energies back and forth right now. I like that the gasoline gets to the 18-day average, backs off. But what it's doing is it's making a series of higher lows. And eventually you'll narrow in the range, the trading range, and that's when I think the market has a big shot to come alive. You've had a short covering spree in nat gas, part of it due to some cold weather that is moving through the country. I know in Chicago we're going to have storms today, snow, rain, a little bit of everything, and that's moving right across the country at this point. But as I said, this is data dependent. So the jobless claims, okay, first, they didn't come in good. They're down 1,000. So these numbers aren't going over 200,000. They're staying under it. The continuing claims up. But this is the fifth straight week where the unemployment claims are under 200,000. It's one thing to say, we're going to see the weakening. And I'm telling you, what keeps going on, you get let off of this job here, and you find it's a benefit to you because you go out and you get another job, and you're probably getting it at a bit higher pay. I was reading a report today in Bloomberg about that with graphs showing it, and it's exactly what I've been suspecting. The Philly Fed business activity, you can go right here. This is the lowest reading since May 2020. So certain parts of the market are weakening from the Fed. The service industry is in no manner doing it whatsoever that I'm seeing. The producer price index, all right, so as we take a look at what this market is doing, you can see that it came in up 0.7. They expected it up 0.4. January producer price, ex food and energy, up 0.5. They looked it up 0.3, and they revised higher the December numbers. Let's see if I can get you the next one. U.S. housing starts. Well, this is where you feel the definitive pressure of higher interest rates. So the starts are down 4.5%. They expected it only down 2.3. It's almost double what they were looking for. The new permits that are being pulled, well, they slipped back to 0.1% increase. They expected 1.5%. I'm already reading about builders, and I told you they'd pull out the playbooks, that they're saying, you go out and you get a mortgage at whatever you can today. We will pay your refinance cost when you decide that you want to do a refi on it. The old playbook. I grew up with that playbook. It's exactly what you do. You keep going and you say, hey, maybe I'll let you do it twice instead of once. Why not? So get ready for that. You're going to see different things to make these people survive. We get the energy analysts are looking for the EI natural gas storage to come out at about 100 billion cubic feet taken out. That's well shy of the average of 166 and last week's 195. So that'll weigh on the market a little unless it comes out to be a stronger number. Now, one of the things that you have to look at today, again, I'm going to repeat, on the break, do you find the support at those key moving averages? That's what you want to look for. So far, each break comes in early in the day, and in the second part of the day, late in the day, the markets take off again and get the buying. Look to see if that pattern stays intact. Be aware of it. Want to remind you, we are going to cover all this, and we are already. For those of you that get our newsletters, as these reports come out, my pros, and we got plenty of them in our firm, they're writing the report out, they're giving you the reactions to it, showing you ideas. Then they'll come up with spread trades, option trades, and futures trades ideas. Can you apply that to your ETF trading? Absolutely. Remember, a lot of these ETFs are based just on what we do in the futures markets, and I, of course, cover ETFs quite a bit. You know, that's one of my services. I love trading them just as much as I like looking at what's going on here. So, lot to be done. How do you get this? It's simple. You go to our website at www.iraepstein.com under free offers. So you just go there, you'll see it, or you can move your cursor right up here. You'll see an icon appear, give it a click, and away you go. I'm Ira Epstein. You have a great day. I'll see you at the end of the day with the market wrap-up. I can't wait to see if this break recovers again or accelerates at the end of the day to the downside. So far, recoveries have been the way it goes. Take care.